Today we are going to discuss on Bitcoin macro trend. I heard someone talking about the uptrend we have on BTC. Yes, if you take this weekly chart and then check from Bitcoin all-time price action, you can see that yes, we are in an uptrend. Every time you have a bull cycle, you will be getting a correction as a bear market, and then you get a bull cycle once again and you get a bear cycle. So this is from the beginning. If you count, yes, we are in uptrend, and in every 3 years we get the bull cycle, and for 1 year we have bear market, which is a downtrend. So what we have right now is we have finished this uptrend over here. For short term, we have downtrend at the moment. And if you zoom in into this every bull cycle and the bear market beginning, how do you find out where we started the bear market? So I will take this cycle from here, from 2011 November drop, which is the bear market bottom. We will go through this from here quickly. So this is a local high, and then we have a local low, which is a higher low here. And then we have a high. Again, this can be the low, and we have a lower high here. But this is an inside structure, inside bars. So we will count this at this time. But since we have not broken this high, I call it an inside structure. So once we have broken this, so then we get a new high, and then we get another lower high for this. Sorry, that's a higher low. So, and then we again move on to the new high, followed by a higher low. So the bear market starts when we break this low over here. This is that low. So if we get another high, we did not get another high here, right? So we get a lower high. And then we come back, and when we break this structure over here, this is that low. If we break this one, then that means that the bear market has begun. So we have broken this low over here. We have put a lower low. Then every time, if you see the market structure here, what was the market structure here? The market structure here was we have every time we have higher highs, and we have every time a higher low. Okay? And when we broke this higher low, that is when the market structure shifted to having lower highs. So every time you see this, even this high here, haven't broken this high. The current high was that one. So from here, what we get is all the time a downtrend until we hit the bottom. And then what we get here, we get a high. This is already an inside bar or inside structure, because the last high was this one. This was the lower high. Then we move on to make a higher low, followed by another high, which took out this high and gave the market a little bit of hope that we might be reversing. But then to find out, the market come back and sweep this liquidity here. That is called a bullish SFP. So once we have taken this liquidity here, we got that bullish SFP, so we started to move higher. So can you see the market structure shift here? We have inside bars, and then we get a sweep of the liquidity, and then we get a higher high. Higher high because we have crossed this high, and then we have a higher low. Again, we have inside bars, so we will not count this again. And then we got another high, followed by a higher low. So as the market moves, as the price develops, we always get higher highs and higher lows. So these are the higher highs and higher lows. And until we break that structure, for example, this was the top, and then we get a higher low, because this higher low is still higher than this one. And then we get inside structure. Within this high and the low, we get inside, which is a lower high, and then again a higher low, and then a lower high one more time, and then it comes out and breaks this low even. That means the market structure shifted at this point. And then if you see, what we have got is a multiple lower highs. So these are the lower highs. This was the top, this is the lower high, and then we get another lower high, which we did not break. Every time, even from this point here, we haven't broken that lower high. So this is again another lower high, and then finally we got that capitulation candle, and we got the low. So there is a market shift here, but this is not an exact market shift. we have a higher low. It's a potential that the market can go higher. And then we got, this is the higher high. Why this is higher high? Because this is higher than this high. And then we are supposed to get a higher low here. But this is the COVID crash, what we have here. So we have multiple lower highs and then higher lows. Then it started to shift here. This is almost like a bull flag, but supposed to break out here. But we got that COVID incident here and the market crashed. But even the market crashed, it haven't broken the market structure here. So this was another higher low, which is higher than this one. And then we continue to put those higher highs, higher lows, higher highs, higher lows. Then finally we have that high and a higher low. We can count this as a higher low as well. So when the market came back, took out this liquidity here, took out this higher low, this is almost a bullish SFP because we swept this liquidity over here and then the market moved up for one more leg. And then finally we broke this low in this structure over here. So this is again, so you understand what I'm trying to get here. So fast forward to what we are and where are we right now is also the similar case, guys. We have high and a low, high and a low, and then again another high and a low, and then finally the top. And then we came back and broke, not at this low over here, we broke over here, this zone. So that makes the market structure already shifted to a bear market or a downtrend at least. So we have broken here, this is the low, this is the higher low once again. So you can see this was the top, and then we have a lower high, and again this is a current lower high what we are facing. And right now we have already cleared this liquidity over here. That is a bullish SFP. That means, are we going higher? Can be. We can be going higher. Or we might get a short recovery here until here, and then we might be continuing to head lower to get lower prices on BTC. So both are possible. So what is the exact trend I'm going to talk about? What I'm referring here is that we are in a downtrend. This was the uptrend here from this bottom to this top. This was the uptrend. And now what we have is downtrend. From this top, we have downtrend until the market structure changes. How the market structure changes. If we get a high and then we get a lower high, if from this zone here, if we get a high and then a higher low, coming back and testing this top over here, that is the point where we can shift the market structure to the bullish. Until then, we are still in a downtrend, guys. This is the downtrend, so we have to follow what market gives us. If you are a trader, then of course, this is the place where you can get into some scalp orders or swing orders even to get this high, and then can short from this zone to the downside until we get the support. And then we can flip bullish once again. But if you are an investor, and if you are looking into investing into the Bitcoin market, then you would rather wait for that confirmation. So the confirmation comes once we get that high and then a higher low. So once you have that higher low here, you are ready to invest into this market, into this asset, and then ride the price towards the higher prices. So now that we have already checked what is the market structure, which is the trend we are at this moment, which is the exact trend we are following at this moment, then we are clear that we are downtrending at the moment. Now I want to show you something interesting. This is a Orca TKW sentiment indicator we have here. And if you can see on the chart here, when you have that pink or a red color sentiment on the price chart, that means there is a max euphoria in the market, which means maximum greed in the market, and people are FOMOing into the asset, and then they are expecting slightly higher prices or even ridiculous targets, I can say. And when you see this aqua color or light blue color or a sapphire color, whatever you can call this, or there is also max fear color, which is green, but we do not see this one here until here, somewhere here I can see that there is this green color candle as well. So when you see these colors, that means there is panic in the market. Panic usually comes in green candles. Those are the candles where we have to find the exact bottom. But this aqua color or sapphire color. This is where you can see that there is max fear in the market. There are some analysts saying that the bottom is already in the Bitcoin chart. There is also a possibility that the bottom could be in, but when you get into the smaller time frame structure, it says otherwise. We got that aqua color candles in this 2015 bear market, and then the price consolidated here, and then came back and took that liquidity once again, and that is a bullish SFP here, and then the price went higher. So similar to that, but if you can see here, we had a COVID crash here, which is showing the yellow candle, but we haven't taken the liquidity here. We haven't crossed the bottom. The only one scenario what happened is similar to this one right now is what I'm seeing. We are getting those aqua blue candles, and then the price action comes back and takes this liquidity over here, and that shows bullish SFP. So have we finished the correction here? I mean, there is a chance that I think I have explained already in my previous video that there could be a possibility that we are still in that fourth wave, where this becomes a 1, 2, 3, 4, 5. But proportionally, I do not like this count. That's why I believe that we are in a bear market. Because if you count the second wave here, this is quite larger compared to this fourth wave here. So I do not, this is even slightly smaller than the fourth wave. So this is a possibility, definitely, but is this the highest probable count? I do not think so. So I'm going to finish the structure which I was mentioning. So this price action here from the bottom becomes 1, and this is 2, and this entire 1, 2, 3, 4, 5 structure here becomes third leg, and then we are in that fourth wave at the moment. So the fourth wave usually an ABC correction, and then we get a final wave up. So that tells us that there is one more move up, which is pending right now. And if we still can go back and check this, let me deactivate the indicator, and we will have our normal candle colors. And if you see this retrace from the top here, and when you measure this retrace, the minimum retrace is 0.236 on the fourth leg, and the maximum retrace can be up to 0.618. So when we measure this fib levels over here for this entire third leg, we have come back and tested that 0.618 level here. This is that 0.618 level, and we have already tested. And then we came back and we have taken that liquidity over here, which created a bullish SFP. Combined with the sentiment, I'm going to reactivate it. So when we get this aqua blue color, so that makes this price showing us the potential that it can move higher for that final fifth wave. Again, guys, this is still a possibility. I'm not saying that this is my most probable count for this fourth leg. We might have already finished that impulsive wave up as this third wave finishes here. And then we have this long corrective fourth wave, which is in comparison, if you can compare to this second wave here, almost like the correction took a long time. And also what we can see here, this is definitely longer than this correction. So it looks like more proportionate to this count over here. And then we have this fifth leg finished over here. So then what we are seeing right now is just a bear market correction from the top, and we have more price action towards the downside. We will get into lower time frame, maybe 1 day chart, and I will deactivate this indicator here. And we can find out that there are a few counts, there are a few scenarios which I see here in the chart, that we can have slight bullish price action for the short time. We were considering this entire correction from the top as a multiple ABC structure. Like this could be an ABC, and then we have another ABC correction here. That is the wave 2. And we have another ABC here as a wave 3, which is the third wave of an ABC correction from the top. Okay, this entire move down as a ABC. And this can be in a larger count, could be just an A, guys, from the top. If we have the because bear market did not finish, usually it lasts 1 year minimum. So If we are considering this price action to be unfinished, we might be just in a A wave here from the top, or we might be in a just W from the top. And what we are facing right now could be X already finished here, and then we have to move down for Y wave. So when I see the liquidity map here, I see there's a bunch of liquidity sitting here at this zone, and that is around 86K zone. And also above, we have this liquidity over here, but this is the most highlighted area here right now. That gives me a kind of information that we might not be finished with this X wave here. We might have slight higher prices, because if you check on CME futures chart, we still have that 84K zone CME gap, which is not yet taken. It does not matter if it doesn't take it this time. It can be in the bull market, it can come back and take it. I mean, we have already faced that in previous market as well. If you can see here, we had a CME gap. We had a CME gap here as well. But market did not care about the CME gap. It just went down. And when it came up, it took this liquidity here. It took this liquidity at this zone. So there is no problem of having CME gap, which could be filled in later in the market. So there is no guarantee that we can get this sweep of this CME gap this time. But considering that liquidity heat map, what we saw around this zone here, around this 83, 84K zone, 86K zone, we can come up and clear this liquidity and then move towards the downside. So it could be WXY, or it could be just an ABC move from the top here. This is a and this could be a B move, and then we are waiting for that third wave, which is C. This is still an assumption because we are discussing the macro here on this chart. So I'm trying to figure out what could be. I did not come prepared for this session here, so I'm just brainstorming here. What we can do right now is go even smaller time frame and check if we have higher price action here or not. The maximum, this bullish SFP, what we are watching at this moment, when we swept this low here, so that made this price action right now is as a bullish SFP. So once the liquidity is already swept from the people who went long here, they have kept their stop loss at this zone. They have kept their stop loss at this zone. Traders who went long here as well, they have kept their stop loss here. And the traders who went long here, they kept their stop loss here. So these longs were never get liquidated or never got stopped out. And if they were holding, and if these traders who kept that long for a long time, if they were holding this long and they did not take out any profit here, they definitely got stopped out on this wick here. So this is the bullish SFP what we have right now. And this makes me believe that we might be heading slightly higher, may not be higher than 68, 69K. And then maybe we will come back and sweep the liquidity once again. Or this could be enough already, and the market maker is thinking to move this price action higher, where we already checked in the liquidity heat map that we can come back and sweep that 86K around that 85, 87K zone liquidity. So why that would be a possibility? Because let's say right now we have from this bottom here, we were counting this as a ABC correction here. What if this correction is not finished? Because we have a lots of price action in this zone. We talked about an ABC, again an ABC, and another ABC is as just the A wave, right? So this is a lots of price action here. So that could have only this ABC tiny move up. If it's a W, probably X, yes, might be a small wave, which is a connector wave for Y wave. But if this is just a and then we are having this B wave can come up higher, guys. Even come up higher and sweep this liquidity. So how about we can count this ABC as just an A wave, and then all this move down as a B wave? Because what I'm seeing right now in the smaller time frame, this doesn't seem like finished. If we go to 4-hourly time frame, this price action here does not seem like finished. What we can see here, let's say from this top here, we have 1 and 2, and then we have this 3, 4, and then all this is 5. So if this entire price action is 5, then we do not see a 5-wave structure within this 5th wave. So that means we have another low to the downside. So let's use this as, okay, let's use the wave structure for this. Yeah. This is still possible because the fifth wave is extended here, and it can be counted as an impulsive wave to the downside, where 3 is not invalidating this first wave. 3 is slightly larger than the first wave. So this is within that Elliott wave impulsive corrective structure or impulsive structure rules. We can count it this way, or we can count it as just an ABC correction. As this is ABC, we have another ABC. So I'm just taking ABC as a A, another ABC as a B, and then ABC as a C. So if in this case, if it's just a ABC move, this becomes a WXY because a multiple ABC corrections. So this becomes WXY. So if it's this case, then we are already done with the move down, and we have formed from this bottom here to this top as a wave A, and internally for this wave A we have ABC structure, and for wave B we have this WXY, which came down, took out this liquidity, and now we are heading higher. This could be, let's say this WXY and ABC is already correction is done, and now we are into the C wave. So this C wave could be a flat. I mean, this entire move ABC could be a flat, where the C wave could have an impulsive move up. This is a bit ugly, so let's do it like this. Yeah. So this is a possibility, guys. And if we use the fib levels extension for this move up from the bottom, so we have to take this fib level from this bottom here for the wave A, and for the wave B to this bottom here. So what do we see? For an ABC flat correction to the upside, the minimum target is definitely 1-to-1. So where is that ABC? So let's move this a little bit. So the minimum target for this flat correction is 1-to-1. That is around 82K. And we can extend this up to 96K here, which is 1.618 zone. That means we can come up and sweep entire liquidity which was laying around that 86, 87K zone. And also clear that CME gap for final. Because you would not have any CME gap from, I think it was a few days ago, I saw this article, and CME futures now trading 24/7. So we do not have any other CME gap other than that 84K zone and 79K zone. This move up here from this bottom, what we have right now, does not really need to be an impulsive wave. It can also be an ABC correction from the bottom. Okay, and that can be WXY. In total, all this move from last Feb bottom, instead of becoming A, because we have that 3 wave up, 3 wave down, and if we have another 3 wave up, then WXY is a combination correction of 3 waves. So that could be a WXY if we just come back and correct this 82K zone. A WXY also can extend to 1272, and that is also a possible count where we can come back and sweep that liquidity around 87, 86, 87K zone. So there are multiple possibilities here where we have lots of price action pending at the moment. And right now what I see, if this was a WXY here from this zone, if this move down here was a WXY, then definitely we have higher prices. And we also have this bullish SFP that makes me consider higher targets. But if this was not a WXY and we just had a multiple 1-2-1-2 structure here, and I have already spoken this in my previous video as well, that if this was a multiple 1-2-1-2 structure here, then we have almost like 1, 2, 3, 4 1-2s, which means this was the third wave. Now we are into the development of that fourth wave. Let's say this was that second wave. We are still in that proportion where we can get a rejection from here to have more downside. That means it is not finished here. We could come back and sweep this liquidity once again. That would be 4-5. But that 4-5 is only for this structure here. That means we have another 4-5 followed by another 4-5 followed by another 4-5. That means multiple 4-5s. And that 4-5 could be coming back and sweeping this liquidity here, then going down, again coming up, down moves. If this is a multiple 1-2-1-2 structure. But if this is only that extended fifth wave, which I already shown you before, like a 1-2, 3, 4, and this is that extended fifth wave, then that for that fifth wave, we need to have internal 5-wave structure. Again, that way also, we need to have one more move down. And that is a 1, 2, 3, 4, 5. So that would make it complete for that impulsive correction to the downside. And from there, we can now plan to head up higher. And if we get that 1-2-1-2 multiple 1-2-1-2 structure, then we might be heading lower. Also, we will need to check if this entire move down here was just an A move from here. This down move was, if that was only a W or just an A move, then we have lots of price action from this A move or a W. We can develop this, we can keep churning up and down, can make up a flat here, and then from this zone, we could be heading down, okay, for a WXY or for a ABC. And if we are just going to get this impulsive correction as a multiple 1-2-1-2 structure, then the target for this correction from this top to this bottom here as a wave A, and if this was the B wave finished here, this is a wave where it is finished, so we are going to take exactly at this zone. So that means if it was a ABC flat, then we have the correction 16K. That is a pretty deep correction here. But I do not think that the bear market will come up to 16K. But anything is possible, guys. I mean, if we have that A move finished here and the B move was this one, then we have deeper bear market. But if we are using this just another A and this is that B, then we are getting another C wave to the upside. Then entire move from this zone to here becomes A. Then from this bottom here becomes B over here. And from here, we can move down. So that becomes slightly better target for the bear market. That maybe comes around 36, 35K zone. This we will have to check in future, guys, in next analysis. So we will keep that for some other day. So I have already spoken weekly time frame, which is macro, and then I have already done the daily time frame, followed by this 4-hourly time frame. Now I'm going to get into 1-hourly time frame and show you something which you need to pay attention to. And that is for that fourth wave correction to the upside. So first, we will have to take that fair value gap on the daily time frame. And how do you do that? The fair value gap is taken from this bottom here, from this candle. We have a large gap here, and that is over here. So we have to make it as a daily fair value gap. So there you go. So that's the fair value gap what we have. And another fair value gap we have is from this candle to this candle top, which is to the wick top. And we have to do it like same again, daily fair value gap. And we have to take another fair value gap that is from this one to this candle here. So these are the fair value gaps what we have at the moment. And why I'm doing this at the moment is just to understand, because there are tools which you can use to automatically place it on your trading view chart for the fair value gap. But this is the way which you can do it by yourself. So if I consider this as a 1-2 structure here, and this was that third wave finished. Now we are searching for that fourth wave. Usually price comes back and fills in those fair value gaps and then goes towards the downside. So that fourth wave can come up here, and maybe we have already touched that zone, and now we will have to move towards the downside. Or we might get cleared this fair value gap. We might even clear this one. We might not touch this one. If this was a 1, 2, 3, 4, 5 impulsive move, then we might be moving down from either these zones, okay? So how to find out where exactly the price can reverse? We will have to use the fib levels from this zone here. Let me use the magnet for this. So, and from this zone, this top to this bottom, because that is where the third wave finished. So now let's make this white more cleaner. What are we doing right now in the chart? We have already passed that .236 level. if you can see here, this is that .236 level. The price action has already hit. In between, it was before, like maybe a few days ago, on last Sunday, it was like 7 June, we have hit between that .236 and .382, which is very rare. The price doesn't hit in between the levels and then goes down. So this was just a retrace, probably a B wave, and now we are into that C wave. Okay, in lower time frame, you can find this as a wave A, B, C, or a W, X, Y. But this wave is not Y in lower time frame because I see a little bit of impulsive move in this wave. So this could be a 1, 2, 3, 4, 5, and then it becomes a ABC flat. So guys, if you are still not understanding the flat structure or WXY or an ABC, just go and watch that Elliott wave tutorial video which I made a few days ago. It's having separate playlist. This is for beginners. If you are interested in learning Elliott wave analysis or any Elliott wave structures, then you can go and check that video. So now moving on, we have already hit that .382 zone. What's next? This is the zone which is the minimum target for a wave 4 retrace. Wave 4 retrace can be .236 as well. But considering this wave 2 here being so shallow, we could get a larger retrace. This I also mentioned in my last video. So I'm happy with the retrace what we have right now for .382, but I do not mind, or I would not be in shock if we hit higher. Maybe 66.6K, that is 50% zone. But this is the level where price can reject as well. But if then the price still wants to go up higher, I would not be shocked if we hit that .618 level around 68.5K. Because there is a fair value gap here, it can come up and fill this half of this fair value gap, and then we can move towards the downside. I'm not saying the price will come here. This is not a guarantee that the price will come here. Either 0.5. It's not a guarantee that it will come up there. We might reverse from where we are right now. So this, you have to understand that these are the probabilities I'm discussing here, and this could be reversing from here, or could be coming up and then finding some resistance over here and then reversing to the downside. And I want to show you one interesting zone here, which I do not see any analyst in YouTube mentioning about. I'm not sure if somebody is mentioning it or no, but I have limited my YouTube views because I do not watch other analysts, which can also affect my own analysis. So I would prepare my analysis first, and then if there was some YouTube analyst who I'm watching for a longer time, and if I prefer this analyst's views, then I would watch it after my analysis. So I'm going to show you what I'm looking for here. If you take this top over here, let's use the magnet. If you use this top, this is that 2021 April top, and join this top to this bearish SFP high, which is clear of the liquidity, to the low what we have here. This is the exact low, or this one? This one, no. This is that low. So if you join this low over here and see, what do we have? Let's use the regular chart. So we will have to redo it again. I'm going to delete this, and I'm going to redo this. So use this top to another top here, and then drag it down to this bottom. So once we have this, then we check. So this is in Wyckoff tape reading. We have an uptrending channel where we have already broken before. If you can see, this was that part where it was broken. And then we came back down, retest this zone, got a rejection here, and we have a higher low at this zone. And then we went up, came back and retested one more time to take the support, and we went up higher. So just pay attention to this channel over here. Even at this zone, if you can see that we have taken the support at the midline of this channel. And then we went up, broke down, came to the midline, haven't exactly touched it, but we went up, took that resistance at this zone, and then broke down finally. And what we have at this Feb low here is we have pierced that bottom on that channel, and then we got that support, and we were bouncing from that support. So what's happening right now? I want to show you what's happening at this moment. So we also can see that we have rejected over this area, exactly at this area, guys. Can you see this? And what's happening right now, you can see here that we have broken from that trend line, or you can say the channel. And then we have a couple of candles below that channel trying to regain the strength, trying to retest. And right now we are piercing that zone. But this is still the candle haven't closed, guys, here. Okay, we have one candle close above that channel. And the second candle is right now building. And it's a weekend price action, guys. I would not take this seriously unless we have weekly candle closing above this channel over here. That would make a confirmation that we might be bullish for the short term or higher term. Because if this was just a WXY correction, which I already shown before, and the correction is already finished, then we might be having a bullish move to the upside. So we will have to pay attention on this channel over here. If we are going to get few green candles here and then coming back and retesting this zone once again, then I would think that we are bullish now and we are expecting higher prices. But if this candle closing below this line here, that means we are developing weakness and we might be heading more lower prices. So the part where I boxed just now, this is the most interesting area at the moment where price can decide if it wants to be bullish or it wants to be bearish. I'm leaning towards the bearish side because we are downtrending at the moment, but I'm keeping in mind that this could be the reversal over here and we could be flipping bullish. And if I see the market structure change in lower time frame, then I would flip my bias to bullish from bearish and ride the trend. So that's it, guys. That's the update for BTC. I have done a weekly time frame. I have broke down to daily, 4 hourly to 1 hour. This is my take in the market, and this is what exactly I am doing in the market. You do not need to follow. I'm just explaining what I am doing here. And if you like this content, you can like and subscribe. I would make another video soon if I see some market structure changes. And if I need to flip the bias, I will make that video as soon as I see the market structure change. So from me, there is only one message, that trade safe and be safe. And I will see you in the next video. Ciao.